So friends, we are 1 minute away to the scheduled start. Sir, actually, Abhishek ji, our chairperson is stuck somewhere. She might have informed you. She went on an important branch. So what we'll be doing is, I'll be conducting the program, and the chairman of West Godavari branch will be giving the opening remarks. Sir, to be very frank with you, what are all we are able to do, or the zeal which we get to do is solely attributable to the encouragement given by the members of the branch, and also a lot number of members who actually love and join the Vijayawada programs because of only those members and their encouragement. It is acting as a catalyst for our activities, sir.
Absolutely, sir.
So we are at 6 p.m. scheduled start time. With the permission of the speaker, shall we start, sir? Right.
Whenever you are ready.
We are used to starting on dot, sir. So we want to do that for this program also. So good evening, friends. All of you are welcome to this session on Incisive Insights into the Budget 2023. Friends, we all know that the budget was presented by Honorable Finance Minister on the 1st of February 2023. Of course, though the budget speech was short, but what are all the amendments that have been brought into in the finance bill? They are a large number. Of course, we have with us Abhishek Murali ji, who was former secretary of SIRC. When he was the secretary of SIRC bagged the All India Best Branch at national level. The region SIRC has bagged the first best region at that year. So friends, I'm very happy to share with you that Vijayawada branch of SIRC of ICA has been awarded the first best branch in the medium category branches for the year 2022. This we have done in a row for 3 years. For the last 3 years, we were featuring in the awards list at a national level of ICA. Friends, I attribute these awards to only the members who have supported, and the student fraternity or community which have supported the endeavors of the committee of Vijayawada branch. So friends, let me start this program with our motto song. We need not stand, but as a mark of respect, we may place our right hand on our heart. Now I request the branch in charge, Ramesh, to please play the motto song. Ramesh.
Yaesha supteshu jagrati, Yaesha supteshu jagrati, Kamam 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 pursho nirvimanaha tadeva shukram tadeva brahma tadeva mritamujjate tasmin lokaha shataha sarve tadunatyati kaschan etadvaita
Yeah, thank you. Now, may I request the chairman of West Godavari District Branch of SARC ICA, CA Ravikiran, to give the opening remarks.
So, good evening to everyone. So, myself, Ravikiran Vandanapu from West Godavari branch. This is the first VCM along with the Vijayawada branch and West Godavari branch. Previously, we are conducting for Godavari branches for Kakinada and Rajahmundry and West Godavari. So, first time they give the opportunity for joining with along with the Vijayawada branch. First of all, thank you for Vijayawada committee members and members of the Vijayawada for giving the opportunity for joining for both the Vijayawada branch along with the West Godavari branch for meeting. And thanks to the speaker of the Abhishek Murali, he's very well known to for all branches because he's, at the time of COVID, so many programs he conducted VCM and not only Vijayawada, West Godavari also conducted 2-3 programs, and the Godavari branches also conducted programs. So he's very eminent speaker of VCM on Incisive stuff on budget 2023. And we warm welcome to all the members of the joint from Vijayawada branch and West Godavari branch for SIRs at ICA. So for giving the opportunity, thank you for all. And one more I want to tell you before, with permission of the Kishore sir, because we want to another one more program, regional RCM, residential program. Jointly we are going to conduct it along with the Vijayawada branch. And it is also within 2 days we'll intimate the total schedule. It is probably are going to conduct 11th and 12th at Dwarka Tirumala. So that a detailed program will you send soon, sir. So very happy to join with the Vijayawada branch also. So thanks to the Vijayawada committee branch, committee members and West Godavari committee and all the members of the warm welcome to all the members of Vijayawada and West Godavari branch. So thank you, sir. But I don't want to take much time because it is the initiative of the topic of the speaker. It is initiative, sir. Thank you, sir. Sure.
President, we are eagerly waiting for the Dwarka Tirumala program, sir. We are ready to give my full support to you.
Yes, definitely, sir. That is only 11th and today only first discussion is completed because they are also willing for Vijayawada branch. So date is also fixed and program also going to fix it within 1 or 2 days.
So from the December month onwards, I am eagerly waiting. You are promising me in December.
Yes, sir. We are planning it well so that you will be having a good experience. So we are planning for a long time. So it will be very much successful. Yes, sir. Definitely on 11th and 12th we will be having the RRC at Dwarka Tirumala. Today also some discussion went on. And definitely it will be crystallized and materialized in a day or two. So friends, let me say a few words about Abhishek ji. He is well known to all of us, but as a formality sake, let me say a few words. Dr. C. Abhishek Murali is a practicing chartered accountant at Chennai, who is the partner of Messrs. Victor Grace and Co. Chartered Accountants. He was elected Secretary of Southern India Regional Council for the year 2020-21. He is also an All India First Rank holder in SEMA Strategy Examination and the 17th rank in final examinations. He also secured All India 5th rank in the International Taxation Examinations conducted by CIOT. He is the youngest elected regional council member in the history of the SIRC for 2 terms in succession for 6 years, that is the term 16 to 19 and the term 2019 to 22, by securing highest number of votes in Tamil Nadu. He has the honor of being the youngest elected secretary of SIRC. During his term as secretary, SIRC has won Best Region Award of ICI for the first time in a period of more than 10 years. He is presently the president of All India Taxpayers Association. On budget, he had a large gathering. I could see his Facebook posts, a few photos. Congrats for you for that, sir. I think it was a packed crowd in the auditorium that day, maybe yesterday, I think. So, friends, he is an expert in direct taxation, international taxation, litigation, and appeals, to name a few. He has also received Abraham Lincoln Excellence Award from the International Peace Council USA for his excellence in tax service and a laudable contribution of repute by addressing more than 500 seminars during the COVID period. Friends, Dr. C.A. Abhishek Murali is an avid golf, badminton, squash, football, and chess player and is keen follower of the game of football. He is regularly posts blogs and he enjoys reading. So friends, with these few words, I hand over the session to the speaker, Dr. C.A. Abhishek Murthy. It's over to you, sir.
Thank you very much, Secretary Sir. A very, very warm good evening to one and all present here. The chairperson of Vijayawada branch in absentia, Shireen Madam, the secretary of Vijayawada branch. Thank you, C.A. Nitakish Ravi Kishore sir, for a very lovely introduction. The chairman of West Godavari branch, C.A. Ravi Kiran sir, plethora of past chairman, management committee members, my close friends and professional colleagues. It's always a pleasure to address at our Vijayawada branch, and being a joint seminar with West Godavari branch, it's an opportunity to speak to more members, which I always enjoy. Now, firstly, before I start, I have to congratulate the Vijayawada team for winning, Best Branch Award for the third year in a row, which is a huge achievement, competing with the entire country. And then winning this award is really, magnificent task, and it shows the effort put in by the committee and also the support extended by all the members. So congratulations to the management committee and also congratulations to all the members. So with that brief opening, I think we can get into the topic today, which is, as rightly pointed out, is the very, very timely topic, very, very important. And I think after a lot of years, maybe 5-6 years later, for the first time, we have come across a budget which has had significant number of amendments. I think it's worthwhile to say, in a very long time, we have not had a budget like this, where so many impactful provisions have been brought. Especially given the backdrop, we have been seeing the news regularly, and a lot of expectations are there in this budget. If you have been following the news, we are talking about capital gains, something is going to happen. We are talking about slab rates, something is going to happen. Why? Because it has been more than 8 years since the slab rates was revised. A middle class person, a salaried person, they're all struggling. A small businessman, they're all struggling, waiting for some relief, because demonetization happened, then GST came, then there was a recession, then COVID happened, then COVID related recession was there. And then finally, in the last maybe 12 months or so, the economy is picked up and people have been waiting for this moment to come. So everyone was expectant in this budget that something major will be coming. And I think the Honorable Finance Minister and Prime Minister have reasonably delivered. When it comes to your macro picture, I don't like to focus on macro. Reason being, this is a very, very important part of the budget, but the impact is not felt by you and me immediately. We won't even feel it, because it is meant to be 15 years later, 20 years later, that benefit. For example, around 8 or 9 years back, there was a big scheme announced saying that smart cities, we are going to develop smart cities across the country. So I don't know what is the position. I don't even know whether we have become a smart city or not. Even if we have become smart city, what is the benefit we are getting? So all of this, I don't know. But I know something is happening. So these sort of impacts, we will not know. Then Startup India was there, Startup India. Then there was another couple of schemes which was brought, affordable housing, insurance for all. Then there was PM Gati Shakti, which was planned last year. Similar to that, this year also, they have announced something called Saptarishi, 7 areas for super boost. So all of these are very important. A lot of capex outflow also expected there. But ultimately, what you and I are most concerned about is what are the tax related provisions, because it is going to impact our day-to-day life. As far as GST is concerned, this is the first ever budget which has been presented since 2017, where the words GST was not uttered by the Honorable Finance Minister. The entire speech, the GST words was not done. And that's because today GST has its own council. They are on a regular basis reviewing it. But there are a few changes which are announced in terms of customs, where the focus has been on Atmanirbharta. That means make in India. Whatever was made in China, they are trying to change that dynamic to say that let it be made in India, let it be manufactured here. So whatever largely imported from China, that rates has gone up. Whatever is to be encouraged to be made in India, mobiles, cameras, TV, electric chimneys, basically electronics. For those, whatever parts are imported, for those specific items, they have reduced the customs duty. Other than this, there's no major change per se as far as your customs or indirect taxes concerned. When it comes to your direct taxes, significant number of changes are there. The reason being, if you are following the news, you would have known the inflation was a big hit. So therefore, naturally, there was an expectation. The second key reason why there was a major expectation this time from the budget is, my dear friends, AIS and TIS. How many of you faced this scenario? And you can keep typing your doubts. You can keep responding in the chat box. I'll always keep it open, so I'll keep responding. So, how many of you faced this scenario? I'm going to tell you a real scenario that happened in my office, where we have one client. He has been filing returns with us for many years now. This gentleman, whenever he comes to file, and we will file it, and I will tell him, sir, you have been paying the same fees last 10, 12 years, sir. We are raising it by 100 rupees. Abhishek, how can you raise 100 rupees? I'm after all pension person. I can't afford all this. You can't raise, Abhishek. I know your grandfather. I know your grandmother. So many years relationship. So all that he will say, finally, I will not be able to raise the fees. I will say, okay, sir, for that 100 rupees, no need to fight, sir. We'll leave it. The same person, after AIS TIS has come, he is coming giving the details. From AIS TIS, I'm getting the information. He has sold shares worth 56 lakh rupees. 56 lakh rupees shares have been sold. When I asked him, I said, sir, have you sold shares? He says, how do you know? I said, sir, you forget how I know. You are supposed to offer it to income. No, till now, I have never shown, I have never given the details. So this is the sort of Harish Chandras we have as clients. Because based on what they give only, we can prepare. For 100 rupees, he will fight. But 56 lakh rupees sales, he does not want to disclose. So this is the sort of people that they are. And I'm sure each and one of us have experienced this. Because when this AIS TIS came, that time only all the secrets about the clients came out. Another client of mine, he'll give the form 16 to the staff. Staff will always say, sir, please give the bank statement. We insist. Whether salary, non-salary, we don't care. We ask for a bank statement. Then when the bank statement they ask, they will say, no need, we don't have time. You just fill it. I said, will it be more than 10,000? No, it will be within 10,000 only. 80 TTA is there. You just file the return, Abhishek. So we will put 9,990 like that. We will put and file. Same person who is saying within 10,000, what will happen? When they are filing the return with AIS TIS, we found he has 6 bank accounts, 6 savings bank accounts, till now never disclosed. And when we ask them, sir, what happened? Do you have this bank account? Their answer is not, yes, I have. Their answer is always, how do you get that information? I have not given. So this is the sort of approach that many people have. So this AIS TIS, yes, there is more work for us, because now we have to look at client information. We have to look at 26AS. We have to look at AIS and TIS. But despite all this, the truthful position of the client's financials now only are coming out. And because of that, hopefully our fees also goes up. We don't know whether that is happening, but it is happening at least for the department. Because you would have followed the news, because of these efforts of AIS TIS, because of the data being collected from various sources, the direct tax mop-up is extremely high. More than 303% jump in the last 10 years. Highest tax collection, direct tax collection. So many number of people are filing the return of income. It is increased by so many crores. All of these figures the government have been releasing, and it is true. These are all real figures of people who should have filed, who should have paid the tax, but were avoiding for so many years. And now, because of AIS TIS, they have got caught in the net. But having said all this, given such a high collection, given the fact that now income tax has information collection from other sources also, we all thought definitely some tax relief will be there. And there was an announcement when it comes to your tax relief. He said, for the benefit of the middle class, for the salaried population and for the small people, we want to support them. So when the finance minister started saying, this time we are increasing the rebate up to 7 lakh rupees, immediately everyone started banging their tables in the assembly. But I was not banging. I was still waiting for them to finish the statement. And when the statement finished, my disappointment was confirmed, because the finance minister said, now for those people who have income up to 7 lakh rupees, you get a rebate. You don't have to pay tax if you are under the new regime. Now, those new regime, the 2 words has a very, very large meaning, unfortunately, associated with it. That meaning being that the new regime is not that attractive. Not many people want to adopt the new regime. How many of you face this scenario? How many of you have clients where you said confidently go for the new regime? In general, what is your view? Before today's budget or before the budget presented 2 days back, what is your viewpoint? Which is a better scheme? Old regime or new regime? I would say majority of the persons will say old regime. Yes, I can see in the chat box, everyone saying old regime, old regime, old regime. Hardly anybody is saying new regime because very few people benefited out of the new regime. In fact, in the press conference after the budget, one of the news presenters asked the question, Madam, how many people are adopting the new regime? So they said more than 51% of the population have adopted the new regime. Then immediately everyone said, no. When I was listening to that, I said impossible. It's just not possible. How can they say 51%? Then they said, this is for companies. Then the press conference interviewer, she asked, no, I'm not asking about companies. I'm asking for individuals. How many people have adopted this new regime? Then they looked at each other, they whispered some 2-3 things, and then they said, actually, that data is not available. So when they said that itself, you know what the implication is. So therefore, they had to make in this budget the new scheme little attractive. And that is the main reason why they have made these changes. So first, we must start with the old regime, the very, very attractive old regime, I should say. Now, under the old regime, please note, there have been absolutely no changes whatsoever. Rebate increased to 7 lakhs in the new regime. Standard deduction additional. Sir, can you just mute the person? Somebody speaking, I think by mistake. I request organizers to just kindly ensure that I'm not able to mute them. I request you just to kindly mute whoever is unmuted. So, as I was saying, when it comes to the new regime, or the old regime, the new regime now has a standard deduction. Additionally, old regime had it already, but old regime has not got anything new. Interest on housing loan, same 2 lakh, capped at that, you cannot claim more than that. 80C, same 1,50,000, not changed. 80D, Mediclaim remains unchanged. 80G, 80E, everything is the same. There is absolutely no change whatsoever done to the old regime. But under the new regime, they have made 2 or 3 changes. First change being rebate increased up to 7 lakh. We all know that. 2 other important changes. The base limit for the new regime has been increased from 2,50,000 to 3 lakh rupees. And one slab between 12.5 lakhs to 15 lakhs, that limit has now been scrapped and it has been included with 20%. So there's no 25% slab. After a 20% slab, after 15 lakhs, it jumps straight away to 30% under the new regime. So there's no 25% slab anymore. It has been merged with the 20% slab. These are all very good developments. But one practical thing, can I ask you? My dear friends, is there a distinction between a senior citizen and a very senior citizen under the new regime? Do I get any benefit if I'm 85 years old? What is my basic rate if I'm 85 years old under the new regime? Yes, you are right. Whoever has put it is still 3 lakhs only. You are absolutely right. If I'm 80 years old more, if I'm in the old regime, then my limit, basic limit is up to 5 lakh rupees. If I'm a senior citizen, it is up to 3 lakh rupees. If I'm not a senior citizen, then it is 2 lakh 50. Here under the new regime, it is now 3 lakhs for everyone, irrespective of your age. So how many people will still adopt it? I'm really not sure. Is it very attractive enough? Because please note, you don't have any of the following deductions. You cannot take LTA, you cannot take HRA. You cannot take education allowance, you cannot take housing loan if it's a self-occupied property. No ATC, no ATD, no ATG, no ATGG, no ATTTA, no ATTTB. Nothing you have, none of these benefits. But is it still so attractive? Because everyone is asking, no, in the newspaper we are reading in the front page, it limits increased up to 7 lakhs. It will be hugely buy into budget. It's an excellent budget, so many benefits. So here, the one thing that needs to be done is a proper analysis to see whether it is actually beneficial. Because now there are two more important things that will happen. I got reminded of the Honorable Interim Finance Minister at the time in 2019, Shri Piyush Goyal ji, who is also a chartered accountant. In his budget, he had made a statement saying that now you can earn up to 10 lakh rupees and not pay taxes on that. So when he said up to 10 lakhs you can earn, you don't have to pay tax. When somebody else comes and says 4 years later, you can earn up to 7 lakh rupees and you don't have to pay tax. Naturally, I will think 1 second, whether 10 is bigger or 7 is bigger, how after 4 years later, 10 has become 7. That means, is it better or not better? I got slightly doubtful. So then I had to do an actual analysis, whether it's really a new regime, whether it's a new idea, or whether it's the same idea repackaged slightly differently. So here I did an analysis with numbers. Let us assume you are earning 10 lakh rupees. You are earning 10 lakh rupees, my dear friends. And let us see that same 10 lakh rupees, how it is structured in both the schemes. Now, under the old regime, you are getting 10 lakh and one. Here also, you are getting 10 lakh and one. Standard deduction. Now it is there in both. So both are equal, no problem. Housing loan. Normally, a middle class person or a normal salaried person, if he has a house, the more likelihood is he'll have only one house owning. Maybe he'll own two much later. But if he owns it all, the likelihood is owning only one house. And most likely that house he is owning, he will be staying in that house. Either he'll be staying or family will be staying. So if I'm paying the interest on the loan borrowed to purchase the house, it will be a self-occupied property. And under the old regime, I get up to 2 lakhs benefit. Under the new regime, I don't get benefit at all. Only if it is let out, I can take the benefit under the new regime. So still, for this provision, old regime is better. Then ATC, up to 1,50,000, I get the benefit under the old regime. Now, irrespective of lower tax rate or not, I am someone who will still invest in PPF. I will still put in LIC. I will still take a mediclaim because the cost of medical insurance, medical costs are very, very high. So therefore, for me, 1,50,000 is still attractive. If I put in a FD, the inflation will just eat it and go. If I put it in the share markets, then suppose by mistake I purchased Adani share. Today I will be in the road. I will not be able to, let's say I invest. Okay, I want to save for my daughter's wedding. When she is getting married, I need to invest. If I put in FD, at least my principal is guaranteed. If I put in the share market and if the wedding is today and I happen to put in Adani Ports, Adani Enterprises, then bye-bye only, no wedding and all, everything is gone. So this sort of scenario risks is there in the market. So Indian economy, culture of Indians largely is to go for safety, have some sort of security. And this you get with only a fixed document, which is likely PPF, ATD, etc. Even if you want to go for market, under ATC, you have ELSS option. It has a 5-year lock-in period, but it is still you have the opportunity to invest in the market. Under the new regime, you don't have that. Then National Pension Scheme, it is a new scheme, so they had to give the equal benefit in both. So you have 50,000 in both. Then of course you have Mediclaim. As I told you, medical costs are very high in India today. So I can take a Mediclaim. If I am under the age of 60, I can take up to 25,000 Mediclaim costs. I can claim under ATD. If I have senior citizen parents, I can take a medical insurance or medical expenses also on their behalf up to 50,000. If I myself am a senior citizen, then my limit is 50,000 for medical expenses or premium also. So together, I can claim up to rupees 1 lakh. In my example, I have taken only the 25,000. 75,000 overall benefit I have taken, but I can go up to 1 lakh. Under the new regime, it is 0. Savings bank interest 80 TTA, I have up to 10,000. Here nothing. 80 TTB means I have up to 50,000 additionally. That also I don't have over here. So ultimately, after seeing which are the better beneficial provisions, it appears to me at 4,65,000, I have to pay tax nil under the old regime. And today, even at the new regime, the new regime at 9,01,000, after taking all the benefits given, My tax payable is still rupees 45,000. So therefore, even after such attractive provisions, it appears to me the old regime is still the better scheme. So that ultimately boils down to the question. A lot of people have put in the chat box, Abhishek, what is your view? Which is the better scheme? Is it the old or is it the new? End of the day, after so much discussion, I still have to say it depends. I don't have a clear answer because you have to calculate on a case-to-case basis. Now, we were doing this very easily till now. And I'll tell you why we were doing it easily. Having two regimes, calculating which is better, etc., was easier. But now one big change they did. They said now the new regime is now the default regime. That means the new regime is a default regime, has a few implications. We file a form, no, when we are selecting new regime. What form do we file? Which form do we file when we have to select the new regime? As rightly posted in the chat box, it is form 10IE. So, sir, when you are filing form 10IE, you know there are certain things you have to do. You have to file it within the due date of 139(1). Then only you get the benefit of the new regime. So therefore, you have certain implications here. When the old regime has been made the optional regime, and when the new regime is made the default regime, that means if I have to take the benefit of 80C, 80D, your housing loan, etc., I must file my return of income before the due date under 139(1) compulsorily. If I don't file within the due date of 139(1), forget it, you are not going to get any tax benefit. Because they will assess you by default only in the new regime, which means you do not get your 80C, you do not get your 80D, you do not get your Mediclaim, you don't get your housing loan or under section 24, everything gone. So you will be actually assessed to tax at a higher rate. Not only that, the next more important thing, once in a lifetime. What does this mean? For business associates, they are allowed to adopt the new regime once in a lifetime only till today. Now they have flipped the position. If you are opting for the old regime, you can come back to the new regime only once in a lifetime. Then after that, you cannot go again to the old regime. So if you are choosing the old regime, you have to stick to it. And then whenever you decide you're coming back to the new regime, you're allowed that once in a lifetime opportunity. What is the meaning of this? What is the repercussion of this? The repercussion is more important than this. You see, when you're a young person, till the age of maybe 32, 33, etc., you at that point of time will be earning up to 7 lakh rupees maybe, or 7.5 or even 8 lakhs. So the new regime is very, very attractive to you. So you will select, okay, new regime, new regime, new regime. But let us assume 1 year you find the old regime better. So you say, okay, I'm adopting the old regime for 1 year. Then you want to go back to the new regime. I'll say, let us go back to the new regime. So I'm going back to new. Then you have exhausted your once in a lifetime opportunity. But at what age do you buy a house? At what age you decide you need Mediclaim, etc.? When you have a family, which may be at the age of 35. When you have a larger family, you will want to buy your own house instead of paying rent, which will be happening again between the ages of 35 and 40. But imagine that assessee today would have already exhausted his once in a lifetime opportunity. He can never once again enjoy the benefits under 80C, 80D, etc. So the ramification of these provisions, the ramification of these limitations is large, because now you cannot simply say, I will choose which is old, which is new, which is better, I will choose. Salaried employees, you can do it. But business persons, you have to check each time. You have to calculate each time. And only then you can actually give the benefit or not. That brings us to you and me. We are chartered accountants. And which head of income we are taxed under? Taxed under business head. But many of us are part of partnership firms. You may be in a partnership firm with your father, wife, mother, anyone, relatives. So essentially, it is not a separate partnership firm, but we get remuneration, we get share of profit. Because of this, we are falling under business head. But is it really in the nature of business? It is actually in the nature of salary only. because whatever expenses I have, I cannot adjust it against it. I'm going for dinner with the client, or I'm going for a meeting with clients. I'm meeting a regulator or income tax person. And because of that, I am getting popularity. Can I adjust that against my expenses of remuneration, what I'm getting paid from the firm? I'm not allowed. Whatever comes, I have to offer it straight away like that. So therefore, when I cannot adjust my expenses against it, I am suddenly put in a business head. And because of that, I have to exercise my once in a lifetime. Commission receipts, 194C or 194J or 194H, somebody deducts the tax. Then you will offer it under business head. Then it is gone. You have exhausted the new regime. Now, Bharati madam has asked a question. Can it be understood that the new regime being default is a way of phasing out the old regime? Madam, there's no need to understand that at all, because in the press conference, which was given after the budget, the finance minister essentially said that. Somebody asked the question, have you given any benefits under the old regime? She said, our sole focus is the new regime. They said, no. What about the old regime? What are you doing for that? She said, nothing. We are focused only on the new regime. Definitely, in the next few years, they are going to remove the old regime altogether. This year is going to be a critical year. I will tell you why. And this is one of the main reasons why they have made the new regime the default thing. They want to track and see, because earlier, if you didn't file Form 10IE, that means you are old. Now they want to see how many people voluntarily are choosing to file under the old regime. By filing the Form 10IE, how many people are doing that? Now, there are two things here. And I'll tell you why they are looking at an angle that you may not have thought of. When you think of the new regime, what are the benefits which are there? Standard deduction is there. And other than that, NPS is there. That's all. No other benefit is there. Now, both of these can be verified from government sources. Standard deduction is automatic deduction if you are under employment. NPS, they can get the data because it's a government data. Whereas, if I'm under the old regime, LTA, HRA, any other children education allowance, other benefits I'm claiming, they have to verify the documents, whether really I'm having a rental agreement, whether really I'm paying the rent. So therefore, there's manpower involved, there's labor hours involved, there is a cost involved in checking if the calculation is correct. Similarly, ATC, ATD, etc., they have to check the receipts, whether really this person has put, simply I have put a declaration, I have put PPF, yes. How they will check? So I have taken Mediclaim, how they are going to check? No way for them to check unless they take it up for scrutiny and verify. But under the new regime, everything is automatic. Standard deduction is a given. They don't have to check anything. I cannot claim excess. Oh, I'm claiming 75,000 standard. It's a fixed amount. So therefore, there is no work for the assessing officer. Our best friends in the CPC, no. Every time they will send one notice, irrespective of what you respond, addition will happen. That only is going to happen now also. All of us would have faced that experience where client will call you, sir, I am supposed to get 50,000 refund. I've got only 20,000. Then what you will do? You will go to the website and you will see. Suddenly they would have adjusted 2006 demand, 2012 demand. We have adjusted against refund. Yes or no? We have all experienced that, no. Because our best friends at CPC, no application of mind, just to do whatever is there. They will adjust the refund, then they'll adjust it against a old demand. Then you will ask them, why, sir, last 3 years you issued refund? If there's old demand in 2012, how come for last 3 years I got refund? 2023 only you are adjusting. For that, they will not have any answer and all. So this is the real practical scenario. And unfortunately, under new regime, they want more and more people to process their returns through a computer system rather than application of mind through an assessing officer. So this is the reality. So Parvati ma'am, I hope that answers your question. There is no doubt about it. They want to phase out the old regime, but they want to evaluate and see correctly how many people are voluntarily asking to choose for the new regime, so that then they will try to bring some more benefits into the new regime. So if you choose the old regime, majority choosers, they will see how to attract them into the new regime. So that is the purpose why they have made that the new regime as the default. Now, the next major amendment pertains to cooperatives. So housing, no change. ATC, ATD, there's no change. I've already touched this. Of course, investment in SCSS and POMIS, there has been an increase. They have doubled the investment value. They have doubled the investment value, but no other tax benefit per se. But this is a good thing, because I think as general public, there was no big government schemes which was available for people to invest in. So there was no big government scheme because generally government means security. My funds are protected. If I put in PPF, I know I will get the money. If I put in Yes Bank, means gone. If I put in PNB, means gone. Today SBI after Adani, I don't know how it will be, but at least government will step in, I know. But if it's a government funds, I have some security. So that is the general mindset of the people in society. So there have been no major schemes which have been announced in recent times. This budget, they announced 3 very important schemes. One is increasing the senior citizen savings scheme, very, very attractive scheme, good interest rates they give. Then even POMIS, they have doubled the limit. So that is also a very, very good thing. I'm very happy with that. Then for women, they brought one Mahila scheme. It's not there in this slide, but up to 7.5% interest they're giving for a 2-year deposit, which is also a very, very good scheme. So I appreciate all that. Satish has asked, so it can be concluded that government is not encouraging savings. Won't it impact economy? In fact, my dear brother Satish, the truth is it will impact the economy positively. And I'll tell you why. When you invest, there is no enough spending happening. Government wants you to spend. They want more transactions to happen. So that is their encouragement. They want to stop people from going for savings, locking in the money. They want the money to be in circulation. So constantly there needs to be payment. But end of the day, you and I know that that is not the mindset of a normal person. Maybe youngsters, people who are working at the age of 20, 21, 22, up to 25, or up to they get married or something, they don't feel that pressure to earn, to invest, or to save for a family or to save for others. Those people may spend. But once you reach a certain point in your career or you reach a certain age, you start looking for security. So I think it's unfair for them by not giving them these avenues. So government is saying, we'll give you a reduced tax rate. We are not going to tell you, you invest in this to save the tax. You put PPF, you put LIC. We are not going to tell all that. We are going to tell you, we'll give you a lower tax rate. You do what you want. You want to put PPF, you put. You want to buy a car, you buy. So they are not coming to say. In my view, I think the government should encourage people to invest, like Manoj Niranjan is telling. People will definitely go for more spends. In my view, if you want to protect the people in the long term, you should encourage them to invest. But unfortunately, definitely, as Manoj very rightly says, people will feel more tempted to spend rather than invest because it's not so attractive at the moment. So therefore, as Vinodji has also told, new scheme will make people more money in the hand. They will not know what to do it. So they'll end up spending. There's a very interesting theory that I read that they said when people have a cash in the wallet, when you spend the money through cash, you'll feel as if you're losing something. So you'll think twice. But what is happening with credit card and net banking? You're not feeling the tangible benefits. So people immediately they say, okay, especially that automated debits which are happening, it will just go every month. So in my card, for example, Netflix, Google, all that goes in the first week of the month. Okay, father is using, I am using, wife is using, somebody is using, like that, I'll think. But really, if you add it up, it goes into a large amount, but people do not feel it. So definitely there is a risk that there will be huge spends, there will not be enough savings, but that is the reality. And it's a calculated thing from the government. It is not a mistake. They have deliberately calculated and they feel based on their numbers, it is important to hit their growth targets. So the next major change pertains to MSME. Now this government and this budget is heavily focused on supporting the MSMEs. And it's a very, very commendable move. But this amendment to what we call section 43B has a little bit of a larger repercussion than simply benefiting the MSME. You see, 43B says there are certain expenditures, normally government-related taxes, employers' contribution to PF, ESI, leave encashment, all of these compensations made to the employees are all expenses which are allowed on payment basis. But when they say payment basis, they still allow you time up to filing the return of income under 130. So suppose I miss paying it by the due date of that payment, then I still have time up to 31st July or 31st of October if I'm subject to tax audit. So I have time up to that date. Then suddenly in this budget, they have brought MSME also into the ambit. Okay, very good. The reason they are saying people are not settling MSMEs in time, we want to encourage them. Encourage them how? On payment basis. If you don't settle the MSMEs within the date mandated under the MSME Act, then you cannot claim that as an expense. This is a very interesting amendment. Because when you go to the MSME Act, the date mandated there is 45 days. So within 45 days, I must make a payment. Then, suppose I don't make the payment, then I cannot claim the expenditure. Do I have time up to 139(1) when it comes to this? It will be silly, no? Suppose I enter into an agreement with the MSME vendor on 1st of April. Then 45 days means by 15th of May, I should settle him. By 15th of May, I should settle him as per the MSME Act. If I'm given time under 139(1), I'm given almost an additional 13 or 14 months till October of next year. I have time to make the payment. So therefore, if you give someone that much time, what is the purpose of this provision at all? It does not mean anything. So what they have specifically done actually in this act, in this amendment, they have said that this provision of MSME is not considered under 139(1). So if you don't settle within 45 days, then it is gone. You cannot claim that expenditure at all. Generally, people asked, does that mean next year I can claim it? If I miss it that 45 days this year, can I claim it next year? That was going to create a lot of confusion. Because you have accrual basis, you have payment basis. Payment basis also I would have made within that year. In other cases, before the end of the financial, if I do it, I'm anyway going to claim it in that year. If I'm going to do it till 31st October, if I'm paying it in the next year, okay, next year on payment basis, I can do it. But 45 days in the same year itself I'm paying, then how can I not claim it as an expenditure in the same year? That is not clear. The amendments are not clear whether I can take the benefit of that in the current year or the next year, whether I can take the benefit at all. And not only that, one further complication. Normally, when you raise a PO or an invoice, etc., on a vendor, the terms of the PO and invoice will be there at the end, at the bottom. You have to make the payment within so and so days. You have to make it to this account, blah, 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 will be there. Now, suppose as per the agreement or as per the PO, I am giving them 60 days time. Then it will still be considered to be 45 days. Suppose I am giving them 30 days time, then it will be considered to be 30. Suppose I am giving them only 10 days time, it will be taken 10. So the minimum number of days is 45. But sir, what if my PO does not say anything? What if I don't have an agreement at all? Then in that case, it is going to be 15 days only. That is what the MSME Act says. If there's no date specified, then it becomes 15 days only. Now this raises a big question. The reason being, two critical things you need to ask. If I'm an auditor or if I'm an employee of the company, does this mean whoever I am doing business with, I have to track whether he's a MSME or not? For example, I buy a pencil from a person. I have to track whether that vendor is a MSME. I have to track whether I'm making the payment to him before 45 days or 15 days. If I'm not doing it, then I have to disallow it. And when I'm issuing my tax audit report, I have to give a certification that every disallowance under 43B is made. That means I have to check if each vendor is MSME or not. So how are you going to do that? Will your client take a declaration from them? Every single person that he is transacting with, he will take a declaration. I am MSME, I am MSME, I am not a MSME. What if the declaration is wrong? How are you going to verify really if he's a MSME or not? Is that vendor going to give you his financial statements to see whether he is a MSME or not? So therefore, there is a practical issue over here. And there is going to be a lot more time involved. As it is, our audit fees do not compensate the efforts that we are taking. Now this 43B also, we have to check whether each person is MSME or not is going to be a big challenge. One good thing that will come out of this, if the CA itself is a MSME, no, at least our client fees may come in time within 45 days because of this. So that is at least the limited hope that we can take positively, because today, most of the clients, they are paying the fees only next year. When they come for next year tax audit, that is when most CAs are getting their fees. So very, very unfortunate scenario, but that is the reality. So if you are a MSME, then maybe he will pay you in time. Or maybe he will not pay you because if you don't allow the expenditure, he will say, sir, I will go to some other auditor. So your fees also gone, client also gone. So hopefully that risk is not there. Hopefully this encourages people to pay the auditors within time. But definitely this provision, while it is 100% going to encourage people to settle MSMEs more, it is also going to result in a lot more work. So this provision has no tax basis. There is no tax basis why they have brought 43B. The only reason they have brought 43B is for commercial purposes. To ensure MSMEs have liquidity, they have brought this. It has no tax logic in it. Faceless assessment, unfortunately, there have been no major change. We were hoping for some changes because so many cases I'm handling. In fact, from Andhra also many appeals that I'm handling. The quality of faceless assessment in many cases has been quite poor. In some cases, it is good, but majority of the cases, the application of mind, the application of the order, all of this, unfortunately, is not being done with a quality basis. And I'll tell you an example for it. There's one case which I'm handling in one appeal from Sivakasi in Tamil Nadu, which is a firecracker, hub. It's when all this Deepavali time is there, they make all their crackers over there for across India. And it's a highly agency-run business. The manufacturer will make, then one agent will come and buy it, and then he will sell it to all these roadside stalls. During Deepavali time, we will see lots of roadside stalls will be there, and he will sell it to the roadside stalls. Somebody who's walking down the road, he is driving down the road, he will buy it from the roadside stall. That is how Deepavali is celebrated. Ever since I am born, that is what I am seeing. So in this sort of scenario, I'm sure that the transactions are majority in cash. Maybe now you may have some GPay, but the very nature is heavy cash basis. So naturally in that agent's account, heavy cash deposit will be there, heavy cash withdrawal will also be there. What they have done in this faceless assessment, they have taken the entire cash deposits and they have treated the entire thing as sales. Unexplained the two, not even sales, unexplained, 60% tax. That assessee is telling, sir, if I have the most successful year also, my margin is only 1%. If you come and tax me 100% of the entire amount, where will I go? Peak credit concept, telescopic concept, so many concepts are there. If he is taking cash deposits, he must consider the cash withdrawals and net it. But our friends in Faceless, anyway, they cannot see your face. So it is all baseless orders only, not faceless. It is baseless and pointless. So every time we are having to fight on appeal on very basic application of principles, basic issues. So the very unfortunate scenario. So we were hoping that some sort of relief will come under faceless assessment. But unfortunately, my dear friends, nothing has come which is worthwhile as far as faceless assessment is concerned. Next major change pertains to your insurance policies. Now you see, a couple of years back, I think it was 2021, they said ULIPs, because it is linked to market. People are abusing these ULIPs and taking the benefit of section 1010D. So they said, if you are taking a ULIP of 2.5 lakhs or more, then you are not eligible for the benefit of 1010D. Okay, fine. Some logic is there. I accept, we leave. This time they have said, once again, rich people are abusing 1010D. How they're abusing? They're saying they're taking the benefit of this 1010D exception. So now what we are going to do, we are going to tax incomes from policies where the premium paid in a year is more than 5 lakhs. That wording is little odd, no? They are not saying they'll tax the majority. They will tax the income from the policies. What does that mean? Because I had to apply my mind a little bit over here. What do they mean by this? Now we'll take a scenario because these are how the policies are structured by all the big LICs and various banks over here. What they are doing, you will invest, let us assume, 50,000 rupees for 10 years. So you will get 5 lakh rupees you would have invested at the end of 10 years. What this policy will do, after you reach the age of 65 years, they will give you 55,000 rupees per month, which will add up to, in end, till your lifetime, let us assume it will add up to 6 lakh rupees. So you are getting 1 lakh additionally, essentially. If you see overall value, I'm getting 1 lakh additional as benefit in the form of a pension. Why people do this? Because they feel at a later stage in life, I may need a guaranteed source of money. So a lot of people, they want to protect themselves in case something happens, in case nobody is there to take care of them. Suppose children are abroad. So something I need to have on a regular basis. So they get into this LIC policy or some other private insurance company's policy, and they get an amount. Instead of getting a lump sum of money, they get a regular set of money. What the government is saying, we are going to tax this 55,000 per month that you are getting. But sir, that is not correct. Because already what I'm investing is a taxed income. Whatever has been taxed only, I'm putting under LIC policy. Now that same 5 lakhs what I'm getting, you are saying that I will be taxed again on it. Normally what you should do, 6 lakhs minus 5 lakhs, 1 lakh you are getting extra. That 1 lakh is like a gain. So that 1 lakh has to be taxed. Yes, I agree. Logically sound, there's nothing wrong in that. But suppose you come and tell me, this 5 lakhs also I'm going to tax. Sir, where will I go? How many times I will keep paying tax on the same money? So they have said, if you have claimed any benefit under ATC, then we are going to tax the entire 6 lakhs, not the 1 lakh, entire 6 lakhs. Naturally, any person taking this policy will go and claim benefit under ATC. So what they are doing, by bringing this provision, they are achieving two things. Not only they are getting more tax, they are silently pushing people to the new regime. Because if you take the old regime, essentially the benefit of ATC is gone because they are taxing already taxed income again. So you will not take ATC because who wants to pay when you are a senior citizen at 65 years old? You are taking this so that you get some money on already money which you have been taxed 30, 40 years back. If they come and tax you again, it's a highly unfair position. So this is the new amendment. But one good thing they said, this is applicable on policies issued after 1/4/2023. So if you have already got into such a policy, you don't have to worry about it. You are at least protected for this temporary period. And if anybody wants to take this sort of policy, please take it immediately. You have 2 months time. So you can make use of this policy before it becomes taxable. Now, cooperative societies, few more changes have been made where it is now, this is how it is currently taxed. But just like how for companies, they brought a beneficial tax rate, manufacturing companies will be taxed at 15% and other companies get a 22% tax rate. Just like that, they have introduced for the cooperatives. Now, naturally, like today morning, I spoke at Karimnagar. Yesterday, I spoke at the Costing Institute. First day, I spoke at Rani Sida on the day of the budget. Everywhere, the common question I got is, Abhishek, we have ATP. Why we will adopt a 15% tax rate when we are getting a 100% tax-free income using ATP? But every single person here knows when you are handling cooperative cases and you adopt ATP, at least in my experience, 99% of the cases gets picked up for scrutiny. If you claim ATP or you claim ATIA, ATIB, or you are claiming any 10A, 10B, any of these exemptions or deductions, all the cases get picked up for scrutiny. However honest you are, you're the most honest person also, the case gets picked up for scrutiny. Eventually, some audition happens, you will go on appeal. So the number of appeals I handle whenever this ATP is involved, whenever 10A, 10B or ATIA, IB is involved is so high. It's so high. It is really, I wonder sometimes, why at all they have these provisions? Because every time when you are making addition and we are forced to go on appeal, the cost essentially will come at least to 15%. So in such a scenario, adopting a 15% is definitely much more attractive than trying to fight for this ATP over multiple years, then interest cost, all that will add up. Then finally, we'll have to go under a Vivad scheme like that only. So for that, a 15% tax rate, in my view, is still a good decision. So I think this is a good amendment that they have made. A couple of questions I got before I move on to the next slide is somebody has asked, sir, what is the disclaimer to be given in the audit report? Or how can we write a management representation letter? Okay, this is a practical question because they are asking this with reference to the 43B. Because practically, how are you going to check how many of your vendors are MSMEs or not? It's going to be very difficult from a practical perspective. In such a scenario, likelihood of getting an MRL is definitely higher. Because to protect me as an auditor, I am certifying it. How can I certify saying definitely I verified everything is okay, 43B, perfect, everything MSME payments they have done within 45 days. By mistake, one thing you make wrong, then you know our friends in department now can levy penalty on the auditor. They have become disciplinary council essentially. Income tax department stepped into the shoes of ICI disciplinary council, 10,000, they'll put a penalty on us, it seems. How they will decide, all that silly in my view, but that is the reality today. So you must get a MRL or you must get a disclaimer saying 43B, we have evaluated to the best possible extent. But the responsibility to know whether the vendor is MSME or not is that of the company. And wherever the company has made the data available to us, we have verified the provisions of 43B. Otherwise, it is the responsibility of the company to classify the vendors or whoever they are making the payment to as a MSME. This definitely you must do it, because if not, you're putting yourself at a risk as an auditor. So definitely I would suggest that you do the same. Now, one more question which has come is under faceless assessment, they are disallowing the deferred tax deduction also. This is a very true reality. You will not believe, in one faceless assessment case, they sent a notice 5 times. Each notice, the assessee has responded. It is there on the income tax portal also. You log in, you go to that e-proceedings tab, you have the list of the replies given. And in every single follow-up notice that they are sending to this response, we have sent a notice on so-and-so date, you have not responded. We have sent a notice on these 3 days, you have not given any response. But I have given response. In each time I'm responding, I'm putting the proof that I've given the response also. After 5 days, after 5 notices, order passed. We have given the assessee multiple opportunities. He has not given anything. Ex-parte assessment, full thing addition. What the hell? It feels even crazy to even think about this, that such a scenario can arise. Can you imagine going and appearing before an officer 5 times, signing in the record after he is making an appearance, etc. You're signing and saying that I have given all these details, etc. And then he passes an order saying you have not given anything. This is the reality of what has happened. And he went on appeal. Obviously, we won the case, but they are asking that 20% demand. No. Why I should pay 20% demand when I have been honest and I have responded? It is that assessing officer's fault and no action taken on him. But our friends in Bombay and Delhi are much more aggressive. That's something I must say. In the south, we are not this aggressive. But when it comes to the north, our friends are definitely much more aggressive. In Bombay, the same thing happened. The exact same case that happened to this assessee that I'm talking about happened to an assessee in Bombay. And what they did, they went to the High Court. They filed a writ. They said, listen, we have responded so many times. How can they pass an order saying we have not responded and demand such a big amount from me? The Bombay High Court summoned that assessing officer who passed the order under Faceless. They tried to trace who is this person. They made that person come and appear in the Bombay High Court and they fined him 1 month salary. I know this is true because that assessing officer happens to be from Chennai. So I know for a fact this is true. And that assessing officer had to pay the travel cost. Every time he went to Bombay, he went by train. 3 days he had to travel. He had to pay the cost out of his own pocket. And this definitely has to happen more often. But how many times he will file a writ? How many clients be willing to spend and go on the writ? The number is very less, unfortunately. But some of the courts are definitely favorable. And we have to be more aggressive. But at least even if we don't go on a writ, we have to go on an appeal. And that is definitely a trend I'm seeing. The number of cases I'm handling from tier 2 and tier 3 cities have gone up substantially after Faceless, because now we have to fight it on appeal. There's no question of I'll help you on penalty, sir, you help me meet targets. All those days and all are gone. We don't know who that assessing officer is. Definitely is not going to help also. Better you go on an appeal and fight the case out. You'll most likely win it in appeal. Now, one more question has come. Can it be a step for them to make the Faceless scheme discouraged? I don't know what this means, Binodji. Maybe you can clarify. Can it be a step from them to make the Faceless scheme? Oh, are you asking if the assessing officer deliberately trying to sabotage the scheme? It is possible, because if you go to any department, wherever you are based out of, one discussion with the assessing officer itself, you'll know they are all very, very unhappy. It's empty. I went for a CIT appeals case yesterday or a couple of days back before the budget actually. And normally the CIT appeals, we have a wing in the Chennai. It's a long corridor. It will always be so busy. And when I go there, I will meet 30, 40 chartered accountants. I'll have a good time. We'll be talking and we'll be exchanging views and discussing the cases. This time when you go, it is just empty. And even the commissioners feel that the feel of the income tax department has gone down. So definitely officers are unhappy. But I think more than them deliberately trying to sabotage it, it's just that they become lazy. If I go and meet one assessing officer and I request, sir, please help, sir, you do something, sir, or I represent the case 5 or 6 times, At least he will feel, oh, this fellow came so many times. Even if I make addition, I will not put very heavy damage. I will be reasonable. That sort of one humanity aspect is there, which is not there in Faceless. It's like, whatever, I don't care. I don't see him. Out of thought, out of mind. So he will just pass an order without having any repercussions. But having said that, there have been good orders also. Cases which I would know 100% I will not get a favorable verdict in face-to-face. I've got good orders also in Faceless. So there are good people. I think it maybe only time will tell. But the practical issues like situations where one case, I had a CIT appeals commissioner who used to go into every single detail. Whatever assessing officer will ask for, he will ask for. And in one case, they had made 14 additions. 14 additions were made. So when I went to the CIT appeals, each of those 14 additions, he wanted the proofs. He wanted invoices. He wanted bank statement to corroborate, and he wanted ledger accounts. So each thing, I had to prepare 5 bundles. You will not believe. 5 spiral bound books. Each must be 200 pages. I prepared, I gave him one copy. Obviously, I have to retain a copy. So huge stationery, I maintained it. It's there in my office, it will be bundled in one corner. This hearing I had in March 2020. March 2020, first week I had this hearing. 3rd week of March 2020, COVID came. And in August of 2020, when we were in the lockdown, Faceless came. Now it is transferred to Faceless. They're asking me to scan and upload whatever I've submitted to CIT appeals. Sir, how am I going to scan 800 pages? I don't know how I'm going to do it. I don't know how they are going to examine it also, even if I put it. So in my view, the efforts, I in fact made a submission saying it's already given. I cannot scan it. It's too voluminous. But I am yet to get a response from them. So such a scenario where voluminous details are involved, where the complexity of the case is so high, I said there must be a physical opportunity given. Whether it is the same officer who passes the order or somebody who at least shares a report to the to the officer who is passing the order. Some methodology like that must be brought into effect. But currently it has not been done. I hope that at least by next budget or somehow in between they bring it. But in this budget, nothing has been done. So going to the next point, startup. Once again, they have extended it by startup benefit by 1 year. I don't think this impacts majority of the persons. Till now, I have not met anyone who has taken the startup benefit. At least face-to-face, I have not met anybody. Many people will ask me, sir, whether I'm eligible. But you have to go to one committee and you have to get approved. That so far I have not come across. Next is a major thing is capital gains. We were expecting a lot when it comes to capital gains. In capital gains, we have given recommendations for changing holding period. We had given recommendations for changing tax rates. Again, various recommendations. One thing we didn't recommend, and unfortunately which has come, is restriction of 54 and 54F. I really don't know why this has come. The only reason I can think of is unfortunately, in the last 3 months, Alia Bhatt sold a house in Bombay. Ranveer Singh sold a house in Bombay for a very, very high cost. It got published in front page of all the newspapers. Other than that reason, I don't know why they have brought this amendment. Where now, if you are an assessee taking benefit under 54 or 54F, then if the cost of the new asset is 10 crores or more, then your exemption or your deduction that you can claim is restricted to 10 crores only. So if I buy a new property for 25 crores, I cannot claim the entire 25 crores. I can claim only 10 crores. Now, this may not impact tier 2 or tier 3 cities, but I can tell you in a city like even Chennai today, the cost of land or cost of buildings in the heart of the city is very high. If you take Bombay, if I own a house in Churchgate or I want to purchase a house in Churchgate, it may be a single bedroom house or a 2-bedroom house. If I buy that house, it will minimum cost me 7 or 8 crores. If this becomes a 3-bedroom house, it will go to 12 crores or 13 crores. This is not because I'm a rich person. This is because that cost of the housing is so high over there. So a person who buys this is equated with a person maybe in Palghat or Cochin or in some corner of the city. With the same 10 crore rupees, he can buy a 8-bedroom bungalow, which has 3 floors, which has multiple parking, private garden, etc. So when they say this person who's a rich person, we want to dissuade them from abusing these provisions, that logic is flawed. The second reason why this is flawed, children education allowance. I saw somebody had put a question for me. saying that children education allowance, how much is it, they asked. If you remember, it is rupees 100. Children education allowance is rupees 100 per month per child. That works out to rupees 1,200. You get the benefit of up to 1,200 rupees. You get a benefit under children education allowance. This 1,200 rupees, whether any corporation school also will say that 1,200 enough. That also, as Parvati madam has put correctly, it is for maximum 2 children only. Which school for 1,200, sir, you can study today? You tell me. So for more than 20 years, because I remember when I entered into CPT itself, or rather my foundation, or however you want to call the first set of examination that you wrote, the rates were the same. It remains unchanged even today. So that is the reality that we are living in. So suppose this 10 crore rupees, what they have said, they do not adjust it to inflation, then my friends, even Vijayawada and all 10 crore houses will happen in a matter of time. It's only going to be in a couple of years at the rate of inflation which is going. Somebody has put it does not even cover the bus fees, which is very true. And they have not amended it. Whether this 10 crore limit, they'll keep changing year on year. I don't know. I don't think it will happen. So once again, the good thing about this amendment is from 1st April 2023, only it is applicable. In fact, I had a client, as soon as the budget came, he had attended my seminar and then he called me that night 3-4 times he was calling. And we were doing a lot of media interviews in my office. And then he kept on calling and then I answered. He said, sir, I was planning to buy a house. I'm selling one huge property. I'm planning to reinvest. That happens to be 12 crores. Can I do it immediately? Can you prepare all the documents? He said, okay, fine. We'll finish it. Because you have to sell it by March. If you miss it, then the 10 crore limit kicks in and you cannot take the benefit of it. So this is a very, very important change, but it has huge ramifications. And I found the reasoning that was given very wrong. The reasoning said there's acute shortage in housing. And people are abusing it. Rich people are abusing. But by bringing a restriction in as 10 crores, do you think more people will sell or they'll not sell? They'll say, why should I buy for 10 crores? I cannot take more than 10 crores value, I will not buy. So rich houses will always be owned by rich people only. Aspirational person can never go buy it. Or there'll be less selling, or there'll be splitting of houses, settlement, transfer it to 3-4 owners. So all these kind of things will start happening. So ultimately, the benefit of the 54 and 54F, why it was introduced to encourage people to sell and transact in housing, that will go off, that will be lost. Market linked debentures, not going to spend too much time here, but the only change over here, a lot of people were using this 10% tax rate for market linked debentures. Now they have said, if you sell it at all, even if you hold it for 5 years, 10 years, 15 years, we don't care. It will always be short term. It will always be short term capital. Presumptive taxation. I saw one question and come on this, so I'm going to address this. The question was, how does this presumptive taxation work? Now, the presumptive taxation limit has been increased from 2 crores to 3 crores if you're a business person, and if you're a professional from 50 lakhs to 70 lakhs. But this increased limit of additional 1 crore and additional 25 lakhs, applicable only if your total cash receipts, not cash payments, not cash transactions, cash receipts are within 5%. If you satisfy this, then you have that higher limit for presumptive. Now, one of the questions that came in the chat box was that if tax audit is applicable, how is tax audit combined with this? Please don't get confused with tax. If I have a turnover between 3 crores and 10 crores, I can avoid a tax audit if my total cash transaction, receipts plus payments, is less than 5%. But it does not mean I can go for presumptive. Between 3 crores and 10 crores, there's no question of presumptive. I only avoid tax audit. But because of this 5% thing, cash transaction limit 5%, many people are getting confused. Please don't confuse it with tax audit. Maximum presumptive I can take is if I have turnover up to 3 crores. That also only if it is within 5% of cash receipts. But suppose it is anything other than that, then my limit becomes back to 2 crores and 50 lakhs. So that's the most important point. A few questions have come on this 54 matter. So is 10 crores the limit for 54 and 54F combined? Oh, very good question. So many people sometimes they take the benefit, double benefit under 54 and 54F. So is it the combined limit? So if I'm taking under both sections, can I take up to 20 crores? Now here they have clearly said The value of the 10 crores is the cost of the new asset. So even if I'm taking benefit under two different provisions, it is still one asset that I'm investing. So therefore, even under both provisions, if the cost of the new property is more than 10 crores, even in the combined benefit, I'm limited to 10 crores only. One more question they have asked. 54F, proportionate deduction. Can you explain? It's going to be very, very confusing, sir. You are absolutely right. But now, for proportionate basis, the cap is going to be 10 crores. The reinvestment will be capped at 10 crore rupees. And then against that, I will have to calculate the proportionate deduction. So it's a very, very silly thing to complicate the provision so much. And definitely there's going to be a lot of legal cases on this. Because we'll take a scenario. I have an existing house. I have existing land. There's already a house constructed ground floor. So what I'm doing, and I'm selling a land. I'm going to construct for 15 crores. I'm constructing 2 or 3 more floors on top. Now, they will say if it is 15 crores, then up to 10 crores only you can take the benefit. Okay, correct, straightforward. What if I'm constructing for 7 crores? Then you should be allowed, But what if they come and say cost of the asset should not be more than 10 crores? The land and the building you have already constructed before exceeds 3 crores. That means 7 plus 3 it is already more than 10 crores. Now, these sort of aspects we can't visualize today, but definitely this will go to the courts. Because our friends in the department will not say it is okay. They will naturally take a more conservative stand and we will take a more aggressive position. But this is going to lead to a lot of litigation. But as CS, we must be happy, at least some appeal cases are coming like that, we can think. So that's the only way to explain it. But I don't agree with this provision at all. I don't agree with the rationale why it is brought also. Sir, section 54 is capital gain reinvestment. Section 54F is reinvestment of net consideration. You are right. You are right. 54F, I will have to take it proportionately to the net consideration, but my reinvestment will be limited to 10 crores only. So I cannot take more than that. So if I'm a situation where capital gains is around 16 crores or 20 crores, then I have to assume that it will be capped only at 10. So I'll be standing to lose because my numerator has become smaller. So these sort of scenarios are going to be a big problem. And I think you will have more and more cases which are going to come up on this in the long term, because of this very complex provision they have brought in capital gains. Sir, say for example, an assessee is out of presumptive taxation in FY 22-23 as his turnover is more than 2 crores. He will be filing uploading PN and PS. Now, if FY 23-24 turnover more than 2 crores but less than 3 and he has cash receipts, payments within, can he opt for presumptive? Yes, he can opt. There's no problem. He can adopt. Next question. 5% cash transaction applicable even to 2 crore limit under 44 AD. Yes, it is applicable only for the 2 crore limit in 44 AD. I don't know what other limit you're talking about. TDS on online game winnings is not a major thing, but the 30% TDS has to be withheld now. Now, one very, very important and major amendment they have done. Very silently this has been done, where now TCS on overseas package on LRS, remittances made outside India for any purpose other than education and medical health, the TCS has been increased from 5% to 20%. This is a very, very shocking amendment. And I'll tell you why. Why did they bring this TCS? We'll take a scenario. You are an assessee or you have a client whose daughter is going abroad for education. Maybe she's going to Harvard, Oxford, Stanford, some big university like that. These people, every year you look at their returns, they are filing returns, turnover within 5 lakh rupees or gross total income within 5 lakhs. So therefore, no tax rebate, they're taking benefit filing. But how they are able to afford Oxford, Harvard? Either they should have taken a loan or they should have got the income. They have not got the income because it is not adding up. So what government said, we have to track these people because they are clearly cheating the income tax. How do we track them? They said when they are remitting the money abroad, let us deduct a small percentage of tax, 0.5%, 1%, something like that we will deduct. And when we deduct that small percentage, we'll be able to track them. We will know when they're remitting such a large sum of money. So that was the logic behind this TCS. Then they said for overseas package, if I'm sending money for overseas package or I'm taking money for overseas, I'm going, so I'm paying Cox and Kings, all these travel agents are booking some overseas package. Then out of that, 5% was made TCS. Already people started complaining. Sir, how 5%? Why so high? It is only tracking, no? You put 1% or 0.5. What is this 5%? It is very high because on income that has been taxed, my salary income I am earning. Out of that salary income, I am booking a travel package for my family. Now, on my salary income, I am already taxed at TDS, highest tax rate, self-assessment tax, everything. Then once again, when I am booking for my family, TCS, they're deducting at 5%. So income which has been taxed, once again in the form of expense, once again they are withdrawing. And now that 5%, they have extended it to 20%. It has been made a 20%. Now this 20% is a shocking increase. I'm going to tell you why. For example, let's assume I'm taking a package of $1,000. Then TDS will be deducted or TCS will be deducted at $200. Ultimately, the money that I'm getting in my hand is only $800. But sir, on this 1,000 itself, I have spent the tax. Full 200 you're taking. And when it was asked in the press conference, somebody asked, "You're doing this, it's very high." In the finance ministry, one official said, "Anyway, those people who are spending like this, they come at least in the 20% to 30% tax bracket. So it is okay." But that is wrong. 20 to 30% is the income criteria. This is an expense on already taxed income. If you want to track, you put 1%, 5% itself high. Now you put 20%, then what happens? 1/5 of what they are spending for their travel is going to go to department as tax. When it is not taxable at all, it is an expenditure. It is an expenditure. There is no tax on that item. But yet 1/5 is going to the department. Highly unfortunate, highly unfortunate. We are definitely representing on this. I think it's inordinately high. And I think it's something that has to be revised. 5% itself high. To go from 5% to 20 is just shocking in my view. I don't know why it has been done, but for some reason they have done that. The next one, Vivad Se Vishwas, it was announced in the budget, but whether it is coming or not, I really don't know. It's a big question mark because the way it was worded was very strange. The Honorable Finance Minister said for contractual disputes between government and government agencies, we are bringing this Vivad Se Vishwas 2. The sequel is coming like that. But whether it is for our tax cases, we don't know. The last screen was very successful and a lot of people take the benefit in it. But under the new scheme, we are waiting to see. So somebody has asked, is this an expenditure tax? It appears to be an expenditure tax. They are saying you can take the credit as a refund whenever you are going at the end of the year. But why I should pay tax at all? It is an expense. It's not an income. So essentially, it is an expenditure tax. Highly unfortunate. And somebody has asked, can I claim the TCS when filing ITR? Yes, you can definitely claim the TCS. Few more changes have made, but charitable societies, a lot of changes has come. I think this itself demands a separate seminar altogether. That too, you have to read it in consonance with the Supreme Court decision. So I think overall, when it comes to the budget, a lot of critical changes have been done when it comes to income tax. A lot of silent killers also have come. One more thing, of course, which I didn't cover, I'll just mention it now, which is holding of your income tax refund. Now they have said, if there's any scrutiny proceedings happening, then your refund will be held. You will not be issued a refund if a scrutiny proceeding is happening. I'm very surprised they brought this because under Faceless, the kind of scrutiny proceedings happening I already described to you is a little steep. So when that happens, if your refund is held, what am I going to do? It's not a genuine addition, but my refund is being withheld. I think it's a very unfortunate scenario because we don't get a relief. So why they brought that, I don't know. So they have brought this as a new rule. So overall, I think it's still a good budget from a macro point of view. From a micro point of view, if you're a salaried person, middle class person who does not invest, does not take any deduction, does not take mediclaim, does not pay interest on a housing loan, then the new scheme is excellent for you. But for everybody else, still today, even after all these beneficial changes, the old scheme only is attractive. And from an advisory point of view, I would still say the old scheme is definitely attractive. As far as the other provisions like capital gains, TCS, etc. is concerned, I'm a little disappointed. I still feel this budget could have been slightly better, could have been more attractive, but the government have done the calculation of the numbers and then they have decided. So maybe there is a logic in what they are doing also. It's very easy for me to sit now after the budget and present on the presented budget, but presenting budget itself is definitely a complex affair. So thank you very much for a patient listening. Maybe we can take some question and answers now. Is that okay, organizers?
Yeah, yes, sir.
Yes, sir. Yes, sir.
Okay, sir. So I will just, you can.
What I will do is I will allow the participants to unmute themselves. Yeah,
Sure.
done
Sure.
by somebody.
I
Friends,
think
you are free to unmute yourself and you can pose your query to the speaker.
a couple of questions have come in the chat box. Maybe I will take those questions first, and then people can answer as and raise their questions as and when they want it. Somebody asked because they have increased the 20% now from 10%. So it was 5% before, not 10%. From 5%, they have increased the TCS to 20%. It's a shocking increase, a big increase. I think it's very unfair. So as insurance policies, combined premium will be counted for rupees 5 lakhs. It need not. What they said is a single insurance policy. So if you take multiple policies within 5 lakhs, then maybe you will stand to gain. But again, they may amend these provisions. But as it stands, they have said no single insurance policy premium paid in excess of 5 lakh per year will not be eligible for it. Sir, could you summarize the changes in the charitable trust taxation? To summarize, I think few major changes. One thing, you have to file the form 10, etc. It has to be filed 2 months before filing the return of income. They have brought a lot of new conditions on application of funds, and for 85%, how are you going to calculate? Donation to another charitable trust is no longer allowed to be claimed under application. So a lot of these have come. I am not the expert as far as charitable societies is concerned, because so many amendments have come here. It requires a deliberate deliberation, because with the Supreme Court decision that happened, which came out a few months back, where they said you cannot earn more than what are the costs. If you earn it, then you are not doing charitable activities. It has to be had as a combined reading, because it has a very, very big implication. Sir, could you share the budget analysis? Yes, definitely. I will share it with the organizers, or I'm also putting my email ID here. So any point of time, you can just message me and you can ask me, or you can mail me. I'll be happy to share it. But I'll also share it with both West Godavari and Vijayawada branch, and they will circulate to everyone.
Sir, one or two flashpoints at the time of presenting the budget.
Yeah.
Is that the government has decriminalized 3,400 provisions. So I'm afraid what are all those 3,400? We'll be very happy, even some 10 or 15 are known to us. And one more thing, the 10x of that figure, 39,000 compliances have been withdrawn. So, yeah. So who has counted that 39,000, and what are those 39,000 is yet to be known. But these two things have are flashed on the screen during the time of the budget speech of the Honorable Finance Minister.
So, of course, this is a recorded seminar, but this is a known fact in Tamil Nadu. I'll give you an example. What happened a few years back, when one of the governments came to power, they had given a declaration that in Tamil Nadu you have something called TASMAC. So all the alcohol shops, etc., was all completely governed by the government. It's owned by the state government. No private party can sell alcohol. So it's a big flashpoint government-wise, because a lot of drunkards, people from very poor population, drivers, all of that, they are addicted to alcohol. And government is selling it. So a lot of people, there's a clamor to shut down a lot of these shops. So there was a declaration given by one of the parties saying that if we come to power, we will close X number of shops, at least 100 shops we will close. So it's a great thing. And of course, when they came to power, they closed also. They really closed 100 shops. And then we happened to be representing one case for the TASMAC. So I was asking the person who was the managing director, I said, sir, they said 100 shops. How you are managing? Because you're losing revenue. He said, sir, whatever 100 shops were closed were already very, very low income generating shops. We closed 100, but the 100 anyway, we didn't get that much income. So like that only. In fact, in US, there's a very funny law. In fact, there's a website called Silly Laws or something like that, where if you see one of the laws, you kick suppose there's a can, Pepsi can is there, you drink it, you're putting on the road. You kick the can 3 times, no problem. If you kick it for the 4th time, you'll be arrested. Why it is there, why they brought it, all that we don't know, but the law is still there. Like that, maybe many laws are there. That is what they would have removed, I think. So 39,000, if you waste your time reading all the laws, you will realize how stupid some of the laws were.
Yes. Sir, one more query has been flashed.
Yeah. Cost of acquisition clause has been changed. Cost of acquisition, I think that is pertaining to self-generated or intangible assets. The reason they brought that is because intangible assets, as far as income tax is concerned, is considered to be nil value because it's intangible. It's very hard to determine what is the value for it. But unfortunately, what happened as far as the act is concerned, nowhere in the Income Tax Act does it say it is nil value. So in many people, when they come for this valuation of intangible assets and they say we have purchased it, and it goes to the High Court, goes to the Supreme Court, the question is, how can department treat it as nil, where in the law it says it is nil? So department are not able to explain. So in order to bring some benefit to them, they have specifically now said, if cost of acquisition, sale of intangible asset is there, then cost of acquisition is deemed to be nil. That's the only change they brought just for that purpose. Sir, what amount is 194 IC applicable? What is meant by consideration whether advance? 194 IC applicable on the full value that is determined here. Suppose, for example, now there is a circumstance where you cannot determine the value, where I'm getting a property in turn. I have a land, I'm entering into a JDA. As a benefit of this, I am getting 3 or 4 flats I'm getting. That is my ultimate consideration. But how will I know the value of the 3 or 4 flats? At the time of entering a power of attorney, I am not going to know. I will know only at the time of completion, because some guideline value, sub-registrar value, etc. will be there. So on whatever is the value at the time of completion, plus any cash or banking transactions, the value of banking transactions, anything I've received earlier prior to the completion, everything put together on that value, 194 IC will be there. The only change which has happened in this 194 IC is they had said on whatever is the guideline value at the time of completion of construction, plus whatever cash received. What our very, very brilliant associate's spot is, they said cash, no, I got it in bank. I did not get in cash. So you don't have to deduct TDS on that. So that was a big debate. In order to bring clarity to that only, they have made an amendment. Otherwise, it's not a big amendment. So still not clear about 44 AD and 44 AD. Old limit is 2 crores and 50 lakhs. No condition of 5% cash payment receipt was there. Is it still standing? Yes. Suppose you are getting receipts, non-cash receipts is 92%, 93%. Then since 8% of your receipts is cash, your limit is still 2 crores. Your limit is still 50 lakhs. Suppose you are getting 95, 96, 97% in banking channels. Then for you, you have a limit up to 3 crores. That is all. The reason is simple. The limit is 1 crore for tax audit. And if it is, more than 5% is total cash transactions, then your limit is 10 crores. But for presumptive, they are restricting it to cash receipts only. So cash receipts, then up to 3 crores you are given. Suppose your cash payments also is less than 5%. Then your limit for presumptive is also 3 crores. And suppose your turnover is more than 3 crores also, up to 10 crores, no need for audit. That's the only reason. I hope it is clear, or if it's still confusing, I can understand why. But I hope you got some clarity from this. Or you can ask more specifically, what is your doubt here? Sir, if we remit the funds from our NRO account to self-foreign account, your NRE account, is TCS applicable? No, it should not be applicable. But I don't know if they will deduct it. If you're a non-resident and you're remitting from NRO to NRE, it should still not be applicable. But I think it may happen in my view, because they cannot distinguish between non-resident and resident. I think they may still tax it at 20%. It may be there. Any more questions? 44 ADA, yes. As I told you, if more than, if your transactions are within 5%, then the limit becomes 75 lakhs for taking presumptive. But it is still 50% only. Up to 75 lakhs, you can take presumptive if your turnover is there, but 50% only is that profit you have to offer. Nice deliberation. Okay, thank you.
And also, the Honorable Finance Minister also stated that previously the average processing time used to be 96 days, but it got reduced to 16 days, and also 45% of the returns are being processed within less than 24 hours. So that is a welcome move, sir. And also, I may tell you that we are experiencing some filings wherein the moment you file, you immediately receive the 143(1) also. That is also happening. And
Yes.
also the refund process is also now it has been taken care, and it is not like the previous years wherein the refund used to be a toughest task to get. But now the refunds are also streamlined, sir.
Yeah, definitely. You will not believe, for one of my clients, we filed the return. Within 2 hours, the return was processed, and next day morning refund has got credited. That sort of speed is really commendable. It's really amazing. So I think a lot of good things also done. We have to appreciate that.
For refund failures also, sir, where a refund reissue request has been made and the bank account is already validated, in those cases also we are seeing the refund being issued within 2 or 3 days.
Yes, I agree.
So friends, any one of you have any more queries, you may please post it in your chat box, or you're free to unmute yourself and speak. Else we'll be concluding the session. Ravikikaran Garu, are you still online? If you can please.
Yes, sir. Yes, sir. Yes, sir.
So a word of thank from you to the speaker.
Okay, sir. Definitely. I am especially thankful to all the members of Vijayawada branch and West Godavari branch, committee members, along with all the members of the 2 branches. And it is very good opportunity for giving the thanks to all the members. And our chief guest, chief speaker of the Abhishek Murali, I don't want to tell you, sir. He's even very elaborate with this one, because he's already conducted so many programs within 2 days. I think within 2 days he's given so many lectures. So it is very utilized, because we don't know, sir. It is only they given only for slab rates of the tax rates in the budget. When you are seeing the speech of the finance minister, we don't know what is the inside of these sections. But everybody, what is that? Is a old regime is better actually. New regime, because everybody is not interested for new budget also. Very good explanation given by the Abhishek Murali, sir. I will thank to for giving time to us and giving elaboration for the budget also. And thanks to the very valuable time also spent with us for 2 branches. And once again, thanks to the Abhishek Murali and 2 branch committees, along with all the 2 branches members also. Thank you very much. Thanks once again for all the members. Thank you and good night.
Right. So we will sign off for now. Thank you, Murali ji, for your lucid explanation. You were never short of words, and 1.5 hour session, what you have taken, you have never paused the presentation at any point of time. In fact, in between, I thought of asking you to have a cup of tea, or if it happens to be a physical session, we might have offered you, but at least you did not even take a single drop of water, and never short of words, and it was very lucid presentation.
We will plan a physical seminar where I will have the courtesy of your tea, sir.
So definitely, yes, sir. Thank you very much. So friends, all of you, thanks for joining, and we will meet you in another session on another day. For now, good night, and we'll.
And one thing, sir, just please remind 11th and 12th, please make it record on the
this is a very prestigious RRC program that is being taken up by CA Ravikikaran. He will be stepping down anytime after 16th of February. So by that time, we want to see that we have a very successful RRC. I request all of you to join for Google Forms will be released. And the pricing is also be made at a very, very competitive pricing, or that to say, very affordable price. And I request all of you take a break for 2 days to have a sightseeing and also a knowledgeable and informative RRC. Thank you one and all. See you next time.